Hi, Dave King, Fledging Financial, and just trying to give people some basic advice to improve their financial lives. Now I'd like to talk about different goals across your different decades of your life. For your 40s, you should be able to have achieved some of the things that you've wanted and be able to have a lifestyle that you want. Uh, but then you'll also start to having increased demands, potentially kids in college and other expenses. Need to start considering seriously saving for your retirement. Where possible, lean forward in your career and take advantage of your highest earning years. And by doing that, boost your earnings, maximize your retirement savings if possible. Definitely get your company's 401k match if you have a 401k. The Secure Act 2.0 allowed 401k and 403b to be not just in a tax deferred account, but to have Roth versions where it's uh, your investment would be tax free when you take it out and you pay the tax up front. Consider that because that money will grow tax free. And when you see your balance in a Roth IRA, it's actually that amount of money that you'll be able to use and spend. In a 401k or an IRA, where the money's tax deferred, the money you see isn't 100% yours because as you take money out, the government's going to take their cut and you're going to have to pay taxes on it. So 20 to 30% of your balance that you see in a 401k or IRA is going to go to the government. But that's not true if it's a Roth or tax-free account. Pay down your mortgage and student loans if you still have them. Review your insurance needs. You can have people, if you have a family and kids that depend on you. So make sure that you have the coverage for people to be protected if something happens to you. Track your investment goals. In the 30s, I asked people to set money aside and not necessarily spend that and watch their lifestyle creep. By the 40s, you have the habits that you have pretty well established. Hopefully, you're living within your means. And now, again, is the time to start considering retirement. Save at least 10% for your retirement so that you have money, don't have to work a lot longer than you necessarily would want to. Also, begin estate planning. Uh, Track your investments, your different accounts, your assets and liabilities. Make lists of those for people so that that information is available. Particularly, this is going to be important if you're the one that's primarily handling the finances in your family, so that other people can find that information for banks. If you have I bonds through Treasury Direct, retirement accounts through work, your brokerage account, all those things that you normally uh, don't interact with, but you do once a year or more, and you know where that information is. If it's not something that's regularly talked about, the people that depend on you to do that need to know where to find that information, where those finances that you've saved can be found.